I am Jason Reid. I'm the Chief Investment Officer of Stagwell, and I'm here to talk to you about sustainable value creation on the Stagwell platform. So let's talk about the Stagwell investment premise. We are seeking to acquire $450 million in new revenue by the year 2025. Why are we doing it? We've got 4 reasons. We're running a value-added investment platform that accelerates growth in the businesses that we acquire. There is ample opportunity to deploy capital in a large and growing marketplace, and we have a scalable sourcing, targeting, and execution platform on which we operate. But most importantly, we have a proven track record of generating returns. So what are the capital deployment marketplaces that we are attacking? First and foremost is the core, marketing services, and occasionally the digital media platforms on which they operate. You know the big ones, Google, Facebook, and Instagram. Second is digital transformation, which oftentimes includes the implementation of core enterprise software services like Salesforce, Magento, and Shopify. Third is data and software products, which the Stagwell Marketing Cloud already participates in through products like Q, Qualified, and Profit. We have a roadmap for global expansion. Stagwell today is a very small fraction of the overall US marketplace, and an even smaller fraction of the international one. As you can see from the map, our affiliate partners provide a direct pipeline for international investment. Let's do a quick case on scaling digital transformation. In 2020, we acquired TrueLogic software and added it to Code and Theory. It brought core Latin American digital transformation capabilities and clients. That business grew 130% in the most recent quarter and has almost 300 engineers, adding 15 more every month. In the same year, we acquired Kettle, which added core design and content practices to Code and Theory as well, and blue-chip West Coast clients. That business grew 80% in the most recent quarter and has over 50 user experience and content specialists. These are 2 prime examples of accelerating growth internationally and domestically through the Stagwell platform. So how do we do it? We've got a synchronized and scalable pipeline. We start with 75 global intermediaries, I'm talking investment banks, that we commune with on a regular basis. We've deputized 12 network heads across the system to source, target, and execute deals on our behalf. And as I mentioned earlier, we have 30 affiliates that create a direct investment pipeline internationally. We manage the entire process through a centralized corporate CRM, which we manage end to end. And we've got a great track record of execution. Since we started in 2015, we've made 35 direct investments, 7 bolt-on investments with network CEO support, and 5 incubator investments. As you can see from the illustrative pipeline on the left, which is actually the pipeline that we executed on in 2019, we looked at 200 companies, brought 100 of them to our investment committee, submitted bids on 40, and acquired 5. The chart on the right shows you that the targets that we are putting forward are highly achievable based on our historical track record. And we've got a very simple rubric for evaluation and execution. We're looking for blue chip clients and those operating in great secular markets. We look for great capabilities. I'm talking about the high value add strategic consultants, some of which you heard from today, that operate in rapidly growing marketplaces. We look for great teams, ones with balanced responsibilities and great chemistry. And most importantly, a great second next generation of leadership. And we like to manage the balance sheet by minimizing liabilities, preferring simple buyouts and option structures to reduce deferred acquisition consideration. Let's do another case, how we scaled the global media group. We started in 2016 by buying PMX Agency in the United States. In 2017, we added a UK footprint through Forward 3D. In 2018, we added both social and global travel media through MMI and Inc. respectively. And in 2019, we added B2B and a West Coast presence through Multiview and the Search Agency. And finally, in 2020 and 2021, through the integration of MDC partners, we became a $5 billion global media powerhouse. So why does any of this matter? Based on our historical track record, for every $100 million that we invest, we can generate between 40 and 80 cents in incremental shareholder value. With the hundreds of millions of dollars that this platform will generate in free cash flow in the next few years, this is a meaningful lever to drive stock appreciation from here. And a final case on Reputation Defender. In 2018, we bought Reputation Defender from Reputation.com at the behest of one of our CEO's recommendations. In 2021, we received an unsolicited offer from a strategic buyer to acquire these assets. During the time that we owned it, we accelerated the company's growth by optimizing the media mix and creating new products, such as executive privacy. The net is we bought a company for $4 million and we sold it for 40, a 10x return in 3.5 years. I know all of our investments will not be this successful, but we will certainly try. With that, I'd like to pass the mic off to Frank Lanuto, our CFO.